Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Ukraine in focus. U.S. and Russian officials set to meet in Saudi Arabia this week. President Trump insists Volodymyr Zelensky will be involved in peace talks. Meanwhile, European leaders gather in Paris for an emergency meeting. Israeli Prime Minister Netanyahu threatens to open the gates of hell on Hamas if remaining hostages are not released. Meanwhile, U.S. Secretary of State Marco Rubio says Middle Eastern leaders should offer an alternative Gaza plan in his first visit to the region. Plus, Ghana's president tells us the government is in talks to refine its $3 billion bailout program with the IMF. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Happy Monday, everybody. It was a very busy weekend of news with all of the headlines coming through from the Munich Security Conference. We are going to unpack them for you, but what I will say is the markets are pricing in and accounting for the possibility of a truce between Ukraine and Russia. But the big question is, the follow-on question is, at what price? At what price for Ukraine and at what price for Europe? So big themes coming out of the Munich Security Conference. Let's just take a look at how markets are faring today. S&P futures leaning towards the green after a solid week last week, up about 10 basis points. Euro Stoxx futures not doing a whole lot, but we should also remind everybody that we had a very strong week for European markets last week, with the index up more than 3%, 14% gains year to date for the European markets, outperforming their U.S. counterparts, again, on a valuation jump, but also the fact that markets are beginning to account for possibility of truce in Ukraine. Euro also seeing a bit of a bounce as well, and that's twofold. On one hand, you've got some weakness in the USD come through. On the other hand, Euro started rallying after that delay came through on the implementation of tariffs. So that was the catalyst during the middle of the week last week. We continue to gain some ground as well. 105, just shy of that is where we are. Watch out for the PMI figures coming through on Friday. And then gold getting closer once again to all-time record highs, up about 0.8%, continues to perform well as a safe haven bet. Flipping over, just a couple of quick charts that I want to point your attention to. One is European gas prices, and you can see from this that these TTF prices, this is just the course of the day, but over the course of the week last week, dropped 11%, again to account for the potential possibility of a resumption of Russian gas. So that's put some pressure, some downward pressure on TTF. Switch over as well in an equity space. What you are seeing is some love pour into the defense sectors. So the names that are, well, this is in the chart, but what I did want to tell you is that European defense names are getting a bit of a bid on back of this optimism surrounding a potential truce deal, but also on the back of Europe's desire to boost their own defense spending and what that's going to entail in terms of investment in that space. So here you have it. European defense companies are surging. Okay, let's also push on and check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. A lot for you to digest as well. It's not just the headlines from the Munich Security Conference, but a couple of drivers for Asian markets. Walk us through them, Avril.
Yeah, we have those US-EU tensions to weigh over Ukraine, but also AI, that's another driver. So today you're seeing the region's benchmark sitting higher, and a lot of this, as I say, is AI-related. We have Tencent, the big boost after one of its apps tested DeepSeek. We also have investors weighing out this reported meeting by the Chinese president with private sector leaders. Key among them, reportedly, Alibaba's Jack Ma. Remember, this was a company that was front and center of China's regulatory crackdown from years ago. So any meeting might be seen as a government endorsement of sorts, maybe a catalyst for the next leg of the rally in Chinese tech shares. For now, though, if you take a look at the gauges, they're looking pretty flat, maybe a bit of caution ahead of the details from that reported meeting. I'd also just highlight what we're seeing in other parts of Asia, including in Japan, where the banks are doing well today after an upside surprise to GDP numbers out of the country. They're gaining along with the Japanese yen, Jumana.
Avril, thank you so much. Avril Hong in Singapore. Now, senior U.S. and Russian officials are meeting in Saudi Arabia next week to discuss a potential Trump and Putin summit to end the war in Ukraine. President Trump says Ukrainian President Volodymyr Zelensky will be involved in the peace talks with Russia.
We're trying to get a peace with Russia, Ukraine, and we're working very hard on it. It's a war that should have never started.
Do you expect Zelensky to be involved in these conversations? What will his role be?
I do. he will be involved, yes.
I will meet with Russians, with only one Russian guy, with Putin, only after we will have common plan with Trump, Europe, and we will sit with Putin and stop the war. Only in this case I'm ready to meet, not in other compromises platforms.
For more, let's bring in Bloomberg's Henry Meyer. Well, there is so much to unpack from the Munich Security Conference. Maybe let's just start with Ukraine's position and the fact that President Zelensky probably went to Munich Security Conference looking for more security guarantees. He didn't walk away with much. So what is your takeaway on what Ukraine are leaving with?
Well, obviously, at the moment, what we see is President Trump has started this extremely rapid process of talks with Russia. I mean, let's bear in mind that he has been in office only a month. We're now having this meeting in Saudi Arabia, which will be between US and Russian officials. And following that, there will be a summit between President Putin and President Trump as soon as the end of this month. Now, although President Trump has said that Ukraine will be involved in those talks, it's not at all clear in what capacity. Will they actually simply be informed of a deal, an arrangement that is reached between Russia and the US? That is the fear that is there today. There is an emergency summit of European leaders today. They've also been sidelined and quite explicitly told that actually they will not be having a role in the talks. So for President Zelensky, you know, the issue is now there is a deal in the making, and he has to try and influence that somehow. Of course, the key here is the security guarantees. Yeah, that's what he's looking for, to try and make sure that in the event the war ends, that Russia simply doesn't attack again within another year or two.
Can President Trump be successful at pushing a deal over the line without the involvement of US's European allies?
I mean, I think his view is that he is going to come up with this arrangement. And I mean, bear in mind that, you know, we're not expecting a final settlement soon. What he's negotiating now, what it looks like, is a ceasefire, temporary halt in hostilities, which then gives a number of months to come up with a longer-lasting settlement. And I think at that point, you know, there would be consultations with European allies, clearly. So particularly since he's expecting European countries to bear the brunt of the burden in terms of the peacekeeping force that would be sent to Ukraine to monitor any ceasefire. So they will be involved, but not on an equal basis.
I think many in Europe were shocked to hear J.D. Vance's speech at the beginning of the weekend, because the expectation was he was going to come in and talk about the benefits of this transatlantic alliance. Instead, he came in and criticized Europe politically. Talked about free speech, censorship, a lot of the culture wars that have been quite prominent in the U.S. political dialogue over the last couple of years. What does this tell us about the future of the relationship between Europe and between the U.S. and the fact that Europe perhaps are now beginning to understand that they can't just rely on U.S. coming to their defense in times of need?
Well, I mean, it's a real wake-up call, and it just tells you the degree to which the new president, new administration in the U.S. is divorced from the European political establishment and from the traditional transatlantic relationship. You know, Trump is looking to completely redefine that relationship. He clearly wants Europe to bear a much bigger financial burden. I mean, we were just talking now about the kind of post-war settlement you might see in Ukraine. And yes, it was an extraordinary speech. And I think that, you know, European leaders will be trying to work out now, how do they respond? You know, how do they work to try and preserve an element of this transatlantic relationship, but at the same time, you know, they're going to have to make a lot of changes, clearly, in the way they act.
Yeah, Henry, thank you so much for the overview of everything that went down this past couple of days at the Munich Security Conference. Bloomberg's Henry Meyer. Well, we talked a little bit about the market reaction this morning. Joining us to discuss more is Standard Chartered Wealth Management's Chief Investment Officer for AMEE, Manpreet Gill. Good to have you with us. The markets, if you take a look back at the performance year to date, have actually been benefiting European equities over U.S. equities. And I do wonder whether you have to dissociate between what is being said politically, but also how markets are interpreting the near term and the possible resolution, or at least a truce, in Ukraine-Russia. Is that going to lead to a sustained outperformance of European markets versus the U.S., do you think?
Morning. Well, I think the key word you used is sustained, and I think that's the real question for us, because I think the context here is important, that this European equity outperformance is coming against the backdrop of quite a long period of underperformance relative to the US. And we have seen these short-lived rallies before, but I think the question for us is, can this be sustained? We know what the short-term catalysts are, but in our view, without a much more fundamental long-term policy catalyst in Europe, most probably accompanied by a significant turn lower in the US dollar, we're just not convinced that this outperformance is sustainable over the longer run. We still think when you step back and look at the fundamental picture, that growth outlook looks much more positive in the US.
Yeah, well, towards the last 2 months of 2024, U.S. exceptionalism became the major theme, and people were putting on trades to express U.S. exceptionalism. A lot of those trades have started to underperform. You've seen the dollar give back some of its gains. U.S. Treasuries, we've been rallying back. We're essentially back at 4.5% now. And I just wonder whether this theme of U.S. exceptionalism has also run its course as well.
I think against the big picture, perhaps not in our view. But I think you raised some interesting trades, right? I think over a shorter horizon, we do sort of like playing some of these short-term reversal trades. I think, to mention on bond yields, we've been big fans of using these rebounds in U.S. bond yields to lock in an income. And I think in the dollar, we seem to be back in about 100 to 110 range in the dollar index. We tested the top side of that, and now as bond yields are softening, we seem to be moving lower within that. But these, in our mental framework, are a little bit more shorter term in nature, so for the next 1 to 3 months. I think on the equity side, what we need is that growth outlook, that earnings outlook to start to change. Because over there, if I take sort of expectation 25, for example, we're still looking at double-digit earnings expectation for U.S. equities, mid-single digits for the euro area. And I think for sustained outperformance, that really has to change. The dollar has to go beyond just trading within a range. Yeah,
what do you make of the euro here? It wasn't that long ago that people were saying it was going to break through parity, but we're back to 105 again.
We are. And the euro, to some degree, I almost mentally sort of treat as an anti-dollar trade to some degree, because I think what we're seeing on the dollar index side, the parity trade was sort of effectively expressing trade that the dollar would break above 110 on the dollar index side. I think for now, it looks like we'll first move lower before potentially testing the top end of that range. So it might mean a somewhat stronger euro in the very short term as the dollar index sort of moves back into towards the 100 to 105 range.
We have got German federal elections coming up this weekend. The polls are pointing towards a coalition of the right, possibly the far right with the center right, but assuming that there is a shift away from the left, what does that mean for the trajectory for European equities here?
So I think for markets, at least, the key focus will be whether there's enough momentum to really sort of put some longer-term fundamental changes in place. Because from a growth perspective, that's really what's been holding European equities back. As we've seen sort of the slower growth environment, not only in Europe, but also in markets like China, start to sort of feed through to earnings expectations. If a new government, whoever's sort of, part of that is able to really put forward some proposals and with a realistic chance of achievement in terms of, shifting the long-term growth outlook, potentially harnessing some new growth catalysts. I think when you sort of look at the spectrum of European equities, that growth catalyst, what could change that outlook fundamentally, I think that's really what financial markets are looking for.
Yeah, at the same time, people are very much focused on defense spending and how Europe are going to fundraise for that. We've seen the chart that I was just talking about, equities, defense, as specific equity stocks have been climbing. But if you think about it from the fixed income perspective, should investors start accounting for the fact that Europe may have to borrow more now in order to fund their defense commitments and their defense goals?
Possibly. And I think it comes back to whether that, for example, ends up being a potential catalyst. Because, look, greater fiscal spending will create separate set of questions. And I think on the bond side, yes, it could potentially mean bond yields sort of have to account for that. But from an equity market perspective, that is one example of what could be a catalyst to say if European governments are willing to spend more than what current fiscal rules allow. From a growth perspective, from an earnings equity perspective, that would be a positive. So there's a spectrum of potential catalysts that would absolutely want to keep a watch on. But I think that's an example of what we need for more sustained outperformance.
Yeah, and many people are saying, I mean, we've heard this before, that it is actually a wake-up call for Europe now. You've got competitiveness, you've got defense, you've got low growth. It's time for European leaders to respond. Yeah.
Absolutely, from a policy perspective, but I wouldn't be in a hurry to write off U.S. exceptionalism until we see those catalysts from an equity market perspective.
Yeah. Manpreet, always good to chat to you. Thank you so much. Manpreet Gill, Standard Chartered Wealth Management's Chief Investment Officer from AMEE. Thank you. Well, still ahead, on his first Middle East tour, U.S. Secretary of State Marco Rubio met with Israeli Prime Minister, where they both praised President Trump's Gaza plans. More on what was discussed next. This is Bloomberg. Israeli Prime Minister Benjamin Netanyahu has threatened to open what he described as the gates of hell on Hamas if all remaining hostages are not released. Netanyahu met with U.S. Secretary of State Marco Rubio, where the Prime Minister said his country is working in full cooperation with the U.S. Rubio is on his first trip to the region and is set to travel to Saudi Arabia and the United Arab Emirates.
President Trump has presented a bold new vision and the only plan that I think can work to enable a different future for the people of Gaza, for the people of Israel, for the surrounding areas. Why not give Gazans a choice? Everybody said this is the largest open-air prison in the world. Not because of us.
Let's now speak to Burcu Ozcelik, a senior research fellow at the Middle East Security at RUSI. Good to have you with us. Let's just start with the status of the ceasefire deal. So far, it is still standing. There was another release of hostages in exchange for prisoners, Palestinian prisoners, on Saturday. And yet, the Israeli Prime Minister has said that the gates of hell would be open if Hamas does not release the remaining hostages. What do you think could possibly derail the continuation of the ceasefire as it stands?
Well, I think that Saturday's release of 3 additional Israeli civilian hostages came as a sigh of relief, in both for Israel, but also the fact that the ceasefire seemed to be back on track after a very rocky week of tit-for-tat statements by both sides, as well as the intervention of U.S. President Trump. So the fact that the ceasefire agreement is ongoing is very welcome, because there was a high level of concern over the past week, of course, as we know. However, there is still a high level of fragility and uncertainty. The big question is whether negotiations over starting phase 2 of the ceasefire agreement will indeed go ahead. And there have been messaging from both sides as to an intention to and a commitment to continue on to phase 2. I think there is interest from the Israeli side, because they want to see the remaining hostages returned to Israel. And so it's important for this to happen. But there are big questions. And of course, the press conference yesterday by U.S. Secretary of State and Prime Minister Netanyahu raises more questions as to the ability, the odds that the ceasefire will indeed go forward.
Yeah, many on the Israeli right, the far right, have cheered on Trump's comments vis-a-vis taking ownership of Gaza, perhaps the forcible displacement of Palestinians. Given that that is a very core part of the Israeli political narrative at this point, is there a risk that the ceasefire gets reneged on simply because the Israeli Prime Minister comes under pressure from within his own government?
I think that there is intense pressure upon the government by the Israeli population. I think a recent poll suggested that 70% of Israeli respondents wanted the ceasefire agreement to continue. onto phase two and onwards. So there is pressure from that direction on the Israeli government at the same time. The right wing, of course, have become emboldened by President Trump's so-called Riviera plan for Gaza. But it's not the only plan, of course. And it should be noted that there are Israelis, both inside the country and abroad, that are resisting and trying to showcase the flaws of Trump's so-called plan. There is also momentum we will see in the coming days and weeks from the Arab world as to what a counter-proposal could look like as well.
Well, I was going to say, maybe this was what the Trump administration had in mind all along. Certainly, you are seeing a potential response out of Arab states. They're meeting in Saudi Arabia this week. There's going to be a formal summit in Egypt at the end of this month to come up with an alternative plan. How realistic is it that ends up being the proposal that is then pursued, the proposal put forward by the Arab states?
Well, I think it's essential that the Arab world's proposal is the one, in whatever form it eventually takes, is the one that is implemented on the ground in Gaza. The alternative, the Trump plan, the forcible displacement of Palestinians, is unrealistic, it's unthinkable, it's morally reprehensible, and in breach of international law. The reality is that it would be near impossible to operationalize without U.S. troops inside Gaza, which President Trump has absolutely ruled out. The forcible displacement of the Palestinians is not a realistic option. And so it's essential, however, for the Arab states, and again, as I've said, there is momentum in this direction, as there has been in the past, but now it's picked up pace, as it should. The Arab world is going to put together a counter proposal. We've already seen several ideas being floated by both Egypt and Jordan as well, the two countries that would be most directly affected if Trump's plan was to be operationalized with the influx of Palestinian refugees.
Yeah.
But it's essential now, and timing is key. There's no time to lose at this stage. And ideally, a counter proposal from the Arab world would already have been on the table. But it's not too late, and hopefully we're getting there.
Yeah. Burcu, always a pleasure to talk to you. Thank you so much for coming on our show. Burcu Ozcelik, a senior research fellow, Middle East security at RUSI. And coming up, major U.S. banks are scaling back investments and cutting jobs in China as trade tensions continue. More on today's Big Take later this hour. This is Bloomberg. A quick look at European markets and equity futures as we head towards the session. S&P futures leaning towards the green, Euro Stoxx futures slightly in the red. Coming up, we speak to the CEO of tech startup SandboxAQ. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Ukraine in focus. U.S. and Russian officials set to meet in Saudi Arabia this week. President Trump insists Volodymyr Zelensky will be involved in peace talks. Meanwhile, European leaders gather in Paris for an emergency meeting. Israeli Prime Minister Netanyahu threatens to open the gates of hell on Hamas if remaining hostages are not released. Meanwhile, U.S. Secretary of State Marco Rubio says Middle Eastern leaders should offer an alternative Gaza plan in his first visit to the region. Plus, Ghana's president tells us the government is in talks to refine its $3 billion bailout program with the IMF. It's just gone 8:30 a.m. across the Emirates. I'm Ziemba Insights in Dubai. Lots of geopolitical stories of the weekend. The headlines coming thick and fast from the Munich Security Conference. And the markets are once again accounting for the possibility of a truce in Ukraine. But as I was speaking about earlier, at what cost to Ukraine and to Europe? That's going to be a big question for months and possibly years ahead. As for today, S&P futures leaning towards the green. We're up 0.2%. We have Euro Stoxx futures not doing a whole lot, but of course, this is on the back of a very strong week last week. Gains of more than 3%, up more than 14% for the year. So European equities continue to do quite well, albeit today, European futures not doing that much. Euro also, the currency, we were just talking about that with Standard Chartered CIO. Again, we've seen a bit bit of a rebound here on back of the weakness in the USD over the last couple of weeks, but also on the tariff implementation delay and some green shoots coming through, perhaps on European growth. Some of the numbers that came through on Friday were slightly better than initial estimates. Gold also in focus. Once again, we are inching back towards all-time highs. We're about 0.7% firmer today, 2,900. The all-time high is 2,968. So we're getting close to there again, but very close to that psychological level of $3,000 as well, as money continues to pour into the safe haven. Of note is the Fed pricing for the rest of this year, and you can see that now 38 basis points worth of rate cuts are priced in. Last week, we had a bunch of stronger than expected inflation prints, US CPI, PPI surprised at the upside. But then we had soft retail sales come through on Friday. So the upshot is the market is back to pricing in about 1.5 worth of rate cuts for 2025. So that's the picture for this year. All right, let's also move on and check in on Japanese markets. Avril Hong is in our Singapore studio. And Avril, I believe we had some GDP figures surprising to the upside out of Japan today.
Absolutely. It was a big beat, to say the least. I mean, you look at the 3-month annualized figure, it was 2.8% growth for the Japanese economy versus the consensus of 1.1%. So Japan pretty much knocked things out of the park for the fourth quarter, and it's against this backdrop that we're seeing the investors kind of pricing in that green light for the BOJ to hike rates. Indeed, if you're looking at Japanese banks, they're doing well today. Remember, rate hikes good for their profitability. We're seeing the yen also climbing, dollar yen sitting well below the 152 handle, and that is actually helping to lift the gauges along with some earnings related developments. I mean, you have Sony, it reported last week, it lifted its income forecast. Today, it's extending gains among the big boosts to the gauges, but really the drag, the Debbie Downer is what we're seeing in the auto names. Remember, Trump did warn on Friday of fresh levies on some of these automobiles, so this potentially puts in the crosshairs the German, the South Korean, the Japanese automakers. They're the ones not doing well today, going the other direction, Jumana.
Yeah, there always has to be a Debbie Downer. Avril, thank you so much for the overview. Avril Hong in Singapore. Well, it's been a month since Saudi Aramco and SandboxAQ signed an agreement to use AI to turn carbon emissions into useful products. Meanwhile, the Alphabet spin-off announced a more than $300 million funding round in December, taking the company's valuation to more than $5.6 billion. Joining us now is Jack Hidary, SandboxAQ CEO. Really good to talk to you, Jack. Thank you for staying up late to speak with us today. I just want to start off with a question about your product offering, because I went to your website, and what's written up there says that SandboxAQ leverages the compound effects of AI and quantum technologies to solve hard challenges impacting society. How does that differ from what else is available right now in that space?
That's a great question, Jumana. Great to be here with you. It's late night here, but great to connect with you and all the viewers around the world. There's a lot going on right now in the AI space. Most viewers are familiar with large language models like ChatGPT and many others. Recently, of course, we'll talk about some of the Chinese models like DeepSeek. Those are the language models, and those have become really commoditized. They're all using data such as the World Wide Web. They use the model like transformers to create language models that you could chat with in a prompt and get useful answers for customer service, doing your homework if you're a student, things like that. That's the language model. But if you're Aramco and you want to make a new kind of product from the output of hydrocarbons, if you're Sanofi, a drug company, and you want to make new medicine for Alzheimer's, for cancer, for immune diseases, then language models are really not the thing you want to use, not the tool that's appropriate. Language models are trained on social media comments and cat pictures and lots of other stuff that we find on the internet. We need an AI, Jumana, that is trained on chemistry, on physics, on pharmacology, on biology. In the case of Aramco, one that's trained on chemistry and catalysts and how to upvalue the output of Aramco. That's what LQMs are, not LLMs, but large quantitative models. That's where SandboxAQ is the global pace setter.
Yeah. Well, thanks for your comprehensive answer there. So fit-for-purpose model. Tell me more about how exactly you're going to take carbon emissions and turn them into something useful, because to me, this sounds like a groundbreaking technology. How scalable is it in reality?
Well, this is a fundamental need right now. When we look at the output of the large petrochemical companies, Aramco is an example. Aramco is the 7th most valuable company in the world, 1.8 trillion in market cap. And traditionally, Aramco, to increase its value, would have to increase its production, right? That's traditionally what a petrochemical company would do. But now it has a new lever to increase its market cap, to increase its value to shareholders. What it can now do is take its same output and increase the value by converting to higher value products. An example would be carbon composites. These are composites that could be used by the automobile industry, as an example, to lightweight its vehicles. I'm actually live today from Detroit, Michigan. You can guess the names of companies that we're going to be meeting with here in Detroit, the automotive capital of the United States. And so there's a lot of opportunity once you have AI that understands chemistry, understands how to convert one kind of carbon into another form of carbon. Then you have the possibility of creating a huge amount of value. And instead of CO2 being a liability, something to be put in the ground, carbon sequestration, capture and sequestration, we can now talk about CCU, carbon capture and upvaluing. This is a new way of looking at carbon.
Well, I guess a philosophical question to follow on from that. Do you think it is artificial intelligence that will ultimately hold the keys to the ultimate solution for climate change?
I think AI is one of the key drivers. When you look at AI across the board, be it in the sustainability area for new battery chemistry, batteries are fundamental not just for electric vehicles, but actually, Jumana, they're even more valuable for stationary applications, storing the energy that we need for the buildings, for the houses, and for the grid itself. That's going to be a huge driver of a more resilient grid that we need across many, many countries in the Gulf region, as well as Europe, the US, and regions around the world. AI is also going to be a deflationary trend. And so when you look at the world's economy, I know that near term people are thinking about inflation, but actually when you look at the 3 to 5 to 7 year time frame, AI really kicks in terms of B2B. That's the bigger part of AI, not consumer AI, but B2B AI. And that, Jumana, has a very deflationary trend. It brings down the cost of housing. It brings down the cost of clothing, food, agriculture, all the basic necessities and staples of life. It brings down those costs. So that's actually a very interesting deflationary trend that I'm not sure all the economists have yet plugged into their models.
Yeah, well, economists, this may sound shocking, but they're not always right. Just a final question for you. You've inked your partnership with Aramco, and you just talked us through that. Are you looking to expand in other places in the Middle East as well, or even more in Saudi Arabia?
Well, definitely, the Gulf region is one of the key growth regions of the world right now. You have governments who are forward-looking. They're embracing AI. They're embracing AI in many, many sectors. Quite a number of the Gulf region countries are also embracing AI for biotech. Saudi Arabia, the Emirates, Bahrain, all have very interesting assets when it comes to genomic assets, data around genomic sequencing, data in electronic medical records. This all becomes possible now to create biotech assets in the region. Traditionally, the Gulf region has had to license medicines and diagnostics from other regions, from the US or Europe or other places. We would love to see a near future, next few years, that the Gulf region countries are building their own IP in the biopharma area as well. And I think this is a real possibility with the AI of LQMs, large quantitative models, that allow countries such as Saudi, such as the Emirates, Bahrain, many others, to start building their own biopharma assets to address their own endemic issues, but also a global issue as well.
Yeah, so interesting. Jack, really good to talk to you today. Thank you for coming on our show. Jack Hidary, SandboxAQ CEO. Thanks. And coming up, our exclusive interview with the German Chancellor Olaf Scholz on tariff threats and free trade. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Ghana's new administration has started talks with the IMF to refine its $3 billion bailout program. President John Mahama told our chief Africa correspondent, Jennifer Zabazaja, that the government is determined to continue with the program.
Happily, we have just had a staff visit, and so our Ministry of Finance is engaging with the IMF. There were few issues. We were not at the table when this agreement was drawn up, and so coming into government, there are a few issues that we thought we should raise with the IMF, including the issue of tax rationalization, because of the target of achieving 24% revenue to GDP by 2028. The program required that revenue should continue increasing at a certain rate. Unfortunately, what the previous government had done was just to slap on more taxes. And we had gotten to a stage where the more taxes that were put on, the less revenue that came in. And so it's necessary for us to look at the whole tax handle, rationalize them, make them more transparent, easy to understand, so that we can have better compliance. We've had that discussion with the IMF, and the IMF have agreed to provide technical assistance for us to do that rationalization.
So engagements have already started. Have you talked potentially about the program ending in May of 2026 being extended, or an additional program being added on?
We've not talked about an extension of the program. We are determined to continue with this program. I think that it means that we must be more prudent in our handling of our finances. We must also look on the expenditure side and see how we can cut waste and also shift resources to more priority programs. And so it's a whole basket that we're looking at. We also have the issue of the debt restructuring and the humps that have been created. This year, we have to pay in excess of 15 billion on the domestic debt exchange. So what we've done is to reactivate the sinking fund and put more resources into it to take care of the repayments that have to be made this year. But all in all, we have a cordial relation with the IMF. The next review, which will be the fourth review, is due in April. But before that, we'll present the budget in March. And so the budget will take into focus some of the issues that have come out from the staff mission. We're hoping to receive the aid memoir today or tomorrow, and looking at the issues that IMF raises, we'll incorporate them in the budget.
I see. And so you don't want any additional funds from the IMF? That is off the table?
Well, it's not off the table. I guess that it's a journey we just started. We've had a good discussion, and if it's necessary to look at additional funds or to extend the program, we'll look at it. But for now, we're determined to continue on this trajectory.
That was Ghana's President John Mahama speaking to our Jennifer Zabazaja. And Rwanda-backed rebels have taken control over Bukavu, a strategic city in the Democratic Republic of Congo. The fall of Bukavu means the M23 rebels control all of eastern Congo's border with Rwanda along Lake Kivu. The DRC government says Rwanda and the rebels plan to occupy the region, raising concerns of a regional war. The African Union has elected Djibouti's foreign affairs minister as the head of its executive arm. Mahmoud Ali Yusuf received support from 33 of 49 member states at a summit in Ethiopia over the weekend. The election comes as the bloc confronts age-old problems, including wars and pervasive poverty, as well as emerging challenges such as U.S. President Trump's shakeup of the global political order. Former Mauritian Prime Minister Pravin Jugnauth has been arrested and is being held in custody on allegations of money laundering. The ex-premier, who denies the allegation, is the second high-profile member of the previous regime to be detained since the new government won elections in November. An Environmental Protection Association says rescue workers in Mali have retrieved 49 bodies from a gold mine that collapsed in the country's west on Saturday. Rescue workers are continuing to search for bodies at the abandoned gold mining site, and most of the casualties are reported to be women. And I'm just going to bring you some breaking news that's coming through from China. It was anticipated to happen, but now we have confirmation that President Xi has met with business people from across various segments of the tech industry, but that also includes the founder of Alibaba, Jack Ma. You may recall that Jack Ma has been keeping a rather low profile since 2020 after the government had set its eyes on removing some of the froth in the tech industry. But the fact that this meeting has been taking place in the last hour or so, the fact that President Xi has spoken to some of the key industry leaders is a sign perhaps that the government is adopting a more lenient approach towards those key sectors. And other business figures also in attendance other than Jack Ma include BYD's Wang Chanfu, he was there, and Huawei's Ren Zhangfei too. So many business people have been listening to a speech offered by the Chinese President Xi that is taking place in China right now. And coming up, Wall Street banks are scaling back investments and cutting jobs in China and shifting focus to other markets in the region. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Well, major U.S. banks are scaling back investments and cutting jobs in China as trade tensions between the two nations mount under President Donald Trump. Meanwhile, the new U.S. investment rules on sensitive technologies like AI, formalized under the Biden administration, have come into effect. So for more, let's bring in China correspondent Minmin Lau. Minmin, just give us a sense of how far U.S. banks are pulling back. How much are they really retrenching from the Chinese markets here?
Yes, well, we have seen how the U.S. regulatory environment changed quite a bit over the course of the last few years, with the Biden administration launching probes into various sectors, imposing tariffs and export restrictions, and that really led to many companies having to struggle to comply with these changing rules, and banks also starting to become more cautious about lending, about investing and arranging deals in China. And so we have seen last few years some of these companies not really making meaningful profits in China and going through restructuring, management shakeups, reprioritizing their priorities away from China towards other markets in Asia like Japan and India. Citigroup, for example, closing its consumer wealth business in China. And these banks, they are getting squeezed from both sides, not just from the U.S., but from China as well. The regulatory environment isn't the most friendly over there. It takes a long time to get licenses for new products approved. There are very strict rules as well when it comes to structured products, which makes parts of the securitization market pretty much off limits to foreign companies. And plus the overall environment of the economy. We've had waves of defaults in offshore bond, for example, and all of these squeezing profits for some of these banks in the China markets.
Yeah, even though it's been quite a strong start to the year for Chinese equities, Chinese markets, and many international investors are moving back to buy into the China story once again. Is there a sense that perhaps maybe these U.S. banks are retreating prematurely because there is still an actual business opportunity to be had there?
Yeah, so we are seeing in recent weeks there almost seems to be this fundamental reevaluation of the investability of China. And as you said, many of these banks, some of these banks have been avoiding huge capital outlay in China, but some of the non-US banks, though, I believe will be better positioned to take advantage of this. Companies like UBS, for example, they are looking to fully own their securities business in China after recording record high profits last year, more than 20% gains in Greater China equities. They're projecting very good gains this year as well. But yes, there are longer term sort of worries. There is still the ongoing economic slump, the consumption slump, the cash flow issues that some Chinese companies face. And of course, the big wildcard this year is the tariffs and how US-China negotiations will pan out this year. But we do see that some of these big banks are starting to issue more bullish calls on China. And it's still early days because some of these banks, HSBC, for example, are going through very extensive restructuring within the company. And we'll see how that really pans out in the future.
Yeah. China correspondent Min Min Lo, thank you so much for the overview of what some of the Wall Street banks have been doing vis-a-vis their presence in China. Let's take a look at equity markets now. Reminder that it is a U.S. bank holiday later today, so we're probably in for thinner trading than usual out of the U.S. But this is the picture for futures, leaning towards the green for both the S&P and the Nasdaq. Your stocks futures have just in the last half hour tipped towards the green as well. Some positive sentiment coming through from the perspective of markets, and that there could be a Ukraine truce in sight, but it raises a lot of bigger geopolitical questions that we will be discussing in the second hour of Horizons. But coming up in the next hour, Gary Dugan, CEO at the Global CIO Office, joins the program with his outlook for markets. I'm Ziemba Insights in Dubai. Stay with us. Jennifer Zabazaja also joins me from Johannesburg. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Ukraine in focus. U.S. and Russian officials set to meet in Saudi Arabia this week. President Trump insists Volodymyr Zelensky will be involved in peace talks. Meanwhile, European leaders gather in Paris for an emergency meeting. Israeli Prime Minister Netanyahu threatens to open the gates of hell on Hamas if remaining hostages are not released. Meanwhile, U.S. Secretary of State Marco Rubio says Middle Eastern leaders should offer an alternative Gaza plan in his first visit to the region. Plus, Ghana's president tells us the government is in talks to refine its $3 billion bailout program with the IMF. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I am Ziemba Insights in Dubai.
And I'm Jennifer Zabazaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Ziemba, it was a busy weekend for geopolitics and a lot to pay attention to moving forward over the next few days.
Yeah, absolutely. I think really big questions are being asked about the future of Europe and their defense assumptions. For this whole time, they've always just assumed that U.S. would come to their defense in times of need. But all of that calculus has been upended over the course of the last couple of days. A real pivotal moment in history, you could say. For markets, investors are just leaning in on the fact that we may be inching closer to some form of a Ukraine truce. And because of that, we saw positive momentum in European equities over the course of last week. European markets, the European stocks futures ended the week up more than 3% today, also leaning unchanged. But in general, there's been a lot more positive momentum going into these European markets. S&P futures not doing a whole lot either, but also trading in the green this morning. Note that it is a U.S. bank holiday, so we'll see slightly thinner trading than usual. Euro also moving higher. We're back up to around 105. Some of that on back of the weakness in USD. Other reasons is the delay with the implementation of tariffs, and some slightly better European data that came through on Friday, upward revision to those GDP figures. So all of that's been helping the euro. And then gold back at 2,900. The all-time high was 2,968, but we're almost back there again. Again, money keeps pouring in to that safe haven. But a couple of charts that I wanted to flag to you, given we've been talking about the developments out of the Munich Security Conference. The first is that take a look at European gas prices, TTF. They've come down 9% over the course of the last week to account for the fact that maybe at some point in the future we could see a resumption of Russian supply, Russian gas hitting the market once again. So we've come down about 10%. What's not shown here is over the course of the first couple of months of the year, gas prices were actually ticking higher on back of colder weather and restocking concerns. But this is the picture for TTF over the course of the week. And then one other chart, which I think is quite interesting, is European defense stocks are doing well. Why? As I was talking about at the top of the show, there is a feeling and an understanding that Europe will have to start spending more and allocating more money into defense. So this is the UBS index that tracks the EU defense basket. It has been performing very well in the last couple of months to account for that possibility. All right, let's also check in on China stocks. Avril Hong is in our Singapore studio. And Avril, just run us through what you're seeing.
Yeah, I thought I'd just highlight the stock movements in Alibaba now that we're back from the lunch break. 20 minutes ago, of course, we saw that red head crossing the terminal, CCTV saying that the Chinese president has met with some of these key business leaders, including from the likes of Huawei, Xiaomi, BYD. But perhaps the one that we were really waiting for confirmation was for Alibaba's Jack Ma. And it's interesting to see how we're seeing slightly more negative picture on Alibaba now that we're back from the break. Of course, this is the company that was once seen as China's e-commerce darling and then succumbing to China's regulatory crackdown. More recently, its executives have been trying to engineer a restructuring, a turnaround. While the stock of Alibaba has actually gained about 60% since the recent trough in the middle of January amid this AI optimism, I thought it's also worth noting that we are nowhere near the levels that we saw just before its end IPO was scuppered. So interesting to see that negative picture, not just on Alibaba, but also on Chinese tech at the moment. Maybe some buy the rumor, sell the fact going on, Jumana.
Yeah, but still a strong signal on the Chinese authorities' part, the fact that they're looking to re-engage again with the private sector, including the likes of Jack Ma, who's been pretty low profile since 2020. Avril Hong in Singapore, thank you so much. Now, back to geopolitical news from the weekend. Senior U.S. and Russian officials are meeting in Saudi Arabia this week to discuss a potential Trump and Putin summit to end the war in Ukraine. President Trump says Ukrainian President Volodymyr Zelensky will be involved in peace talks with Russia.
We're trying to get a peace with Russia, Ukraine, and we're working very hard on it. It's a war that should have never started.
Do you expect Zelensky to be involved in these conversations? What will his role be?
I do. He will be involved, yes.
I will meet with Russians, with only one Russian guy, with Putin, only after we will have common plan with Trump, Europe, and we will sit with Putin and stop the war. Only in this case I'm ready to meet, not in other compromises platforms.
Well, Bloomberg's Greg Sullivan joins us now. One of the takeaways from the weekend's developments is that the U.S. is sidelining Europe and to a certain extent Ukraine, which is ironic given all of this involves the future of Ukraine. What do you think this means for the ultimate resolution to the conflict if Putin is already starting with an upper hand?
Well, there's two things I think that most of the Europeans are looking at right now. And one is, like you said, the resolution to this conflict. Europeans and Ukrainians are worried that if they are being sidelined, Putin could agree, or Trump could agree with Putin to some sort of terms that are less favorable for European and Ukrainian security. And that worries them, and that's why they want to be at the table negotiating. But there's a broader worry, too, which is what is the changing nature of that European transatlantic relationship? Yeah. Clearly, the U.S. seems to be stepping back, and that has Europeans very worried, given that they've been reliant on the U.S. for their defense. Any agreement that potentially emboldens Putin also threatens to ratchet up the tension and feeling of insecurity in Europe.
It was interesting to hear President Zelensky in his speech. He called for the creation of a European army. And I think there is also recognition amongst European officials that they have to focus more on defense spending. There's even a summit being held today at Macron called it together so that they could put together a coherent response. Is it likely, therefore, that in the coming years we are going to see more attention and more focus out of European leaders on defense spending?
Well, there have been calls before for a European army, European defense, and this certainly seems to be galvanizing them. There's alarm bells ringing all across Europe right now, especially after what we heard in the Munich Security Conference. There does seem to be some urgency to discuss at least a response to the U.S. or a way to realign their interests with the U.S. As you said, there's that meeting happening today in Paris. But longer term, it does certainly seem like it's galvanizing support for more Europe taking on more of their security interests.
Yeah. Greg, thank you so much for the overview. That was Bloomberg's Greg Sullivan giving us the latest analysis from the Munich Security Conference.
Now let's turn to the Middle East. Israeli Prime Minister Benjamin Netanyahu has threatened to open what he described as the gates of hell on Hamas if all remaining hostages aren't released. Netanyahu met with U.S. Secretary of State Marco Rubio, where the Prime Minister said his country is working in full cooperation with the U.S. Rubio is on his first trip to the region and is set to travel to Saudi Arabia and the UAE. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams, who's been following this story. Dan, a number of takeaways from this meeting that we saw over the weekend between Rubio and the Prime Minister. What would you say is the main takeaway that really sums up these discussions?
Well, I think the Secretary of State was really at pains to close ranks with the Israeli leader on the major regional issues, Iran, and specifically Hamas. Keep in mind, we are now toward the end of the first phase of the Gaza ceasefire, and we're reaching decision point on the question of whether there'll be a phase two. Phase two would entail Israel effectively, for the time being, countenancing the continued reign of Hamas in the Gaza Strip. This is something Israel has said it will not do. Its war aim includes destroying or demolishing Hamas rule and demilitarizing Hamas in the Gaza Strip, and indeed it has had public support from the United States about this. Now, Rubio restated that. He actually used the word eradicate for what he said should happen to Hamas. The question is whether that will be put off, whether that will be kicked down the road so the hostage releases that come with extending the ceasefire can continue. That's certainly something that Trump wants, and certainly something that his Middle East envoy, Steve Witkoff, has said is going to be happening in the coming days. An active discussion of entry into phase two.
And Dan, when we talk about the plan that is potentially being presented, Rubio did put forward, as you were mentioning, that the U.S. plan is going to be intact unless there's another plan put out there. What do we know about the Arab Gaza plan that is set to be presented?
Well, it depends if you ask. If you ask the Palestinians and Arab powers, it's a dead letter. If you ask the Israelis, specifically the Israeli finance minister, who gave an interview 2 days ago on Israel's version of Meet the Press, he said that there are working teams, Israeli and U.S., already preparing the ground, and that this could get underway within weeks. The big question is, are there countries that would accept, on a large scale, Palestinian evacuees from the Gaza Strip? Keep in mind that Trump spoke of as many as 1.8 million. There are 2.3 million Palestinians in the Gaza Strip. That's a lot of people to distribute among countries that are not appearing to be stepping forward with any great alacrity. So it's very hard to know what to make of this. There are theories that perhaps Trump was shooting for the moon in terms of a outrageous plan, something that would never get off the ground, but would galvanize Arab powers, Middle Eastern powers to come up with an alternative, a workable alternative to what the U.S. administration, the Israeli government have said will not work, which is a return to the status quo ante in the Gaza Strip. Another war, another truce, more rehabilitation, more reconstruction, and another war in the future. So I think at least some of the sides in this conflict are hoping that someone will come up with a workable, original idea.
Dan, always great to get your reporting on the show. That's Bloomberg's Dan Williams in Jerusalem for us. Thanks so much. Now, Ghana's new administration has started talks with the IMF to refine its $3 billion bailout program. President John Mahama spoke with us and told us that the government is determined to continue with the program.
Happily, we have just had a staff visit, and so our Ministry of Finance is engaging with the IMF. There were few issues. We were not at the table when this agreement was drawn up, and so coming into government, there are a few issues that we thought we should raise with the IMF, including the issue of tax rationalization, because of the target of achieving 24% revenue to GDP by 2028. The program required that revenue should continue increasing at a certain rate. Unfortunately, what the previous government had done was just to slap on more taxes. And we had gotten to a stage where the more taxes that were put on, the less revenue that came in. And so it's necessary for us to look at the whole tax handle, rationalize them, make them more transparent, easy to understand, so that we can have better compliance. We've had that discussion with the IMF, and the IMF have agreed to provide technical assistance for us to do that rationalization.
So engagements have already started. Have you talked potentially about the program ending in May of 2026 being extended, or an additional program being added on?
We've not talked about an extension of the program. We are determined to continue with this program. I think that it means that we must be more prudent in our handling of our finances. We must also look on the expenditure side and see how we can cut waste and also shift resources to more priority programs. And so it's a whole basket that we're looking at. We also have the issue of the debt restructuring and the humps that have been created. This year, we have to pay in excess of 15 billion on the domestic debt exchange. So what we've done is to reactivate the sinking fund and put more resources into it to take care of the repayments that have to be made this year. But all in all, we have a cordial relation with the IMF. The next review, which will be the fourth review, is due in April. But before that, we'll present the budget in March. And so the budget will take into focus some of the issues that have come out from the staff mission. We're hoping to receive the aid memoir today or tomorrow. And looking at the issues that IMF raises, we'll incorporate them in the budget.
I see. And so you don't want any additional funds from the IMF? That is off the table?
Well, it's not off the table. I guess that it's a journey we just started. We've had a good discussion, and if it's necessary to look at additional funds or to extend the program, we'll look at it. But for now, we're determined to continue on this trajectory.
That was Ghana's President John Mahama speaking with me about a lot of the issues that Ghana has been dealing with, Jumana. And listen, he's just a few weeks into his presidency, but the reason why this was significant for us was because when he was campaigning, he campaigned on the promise to bring down a lot of the burdens that Ghanaians have been feeling with increased taxes, as he was mentioning there, to abide by this program. And also because he talked about restructuring this IMF program. So we really wanted to know where his head was at now that he's actually in the seat. And not to mention, he also now has to deal with and think about potential Trump tariffs coming into the fold and affecting the cost of living pressure. So it was really fascinating for us to just dig into some of those discussions with him.
Yeah, such a great get, Jen, also in the context of those IMF discussions, because they do have a bond that is set to be maturing next year. Did you get the sense that they would like to continue with an extension of the IMF program, or would they like to exit it?
You know, what John Mahama was saying was they want to continue with this current program, and they think some of the measures that they've taken could potentially keep them on the right track. They don't want to get into further debt burden situations. And he's actually been on quite a mission in these first few weeks to root out a lot of the waste that he says that they've seen in the economy. A lot of it has to do with corruption. A lot of it has to do with spending in areas that they don't need to. But he really needs to, again try to focus in on how to relieve Ghanaians from this 23% inflation without putting additional taxes on there just to abide by this program. But he says they plan to continue with this current program, and hopefully he believes that they'll be able to get inflation down and actually get the country back on track. But again, the big wild card is what happens with the U.S., and that is part of what we also discussed with him. And we're going to be previewing a lot of that discussion and airing it on Next Africa when we do premiere the new show in just about 2 weeks' time, February 28th. We talked to him about Trump tariffs, about the future of the relationship between Africa and also the U.S., and also his thoughts on the anti-LGBTQ bill that has potentially been making its way through the government there. So a lot on the table there. But still ahead, we will talk about why the Global CIO Office says markets and households may have to cope with a near-term spike in inflation as traders continue to digest Donald Trump's tariff plans. We have that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Asian stocks gaining today on AI optimism in Hong Kong and China. Elsewhere, investors remain cautious due to U.S.-EU tensions and the war in Ukraine. Joining us to talk about all things markets related is Gary Dugan, the CEO of the Global CIO Office. Gary, great to get you on. So we mentioned that Asian stocks are getting a bit of optimism this morning due to the AI discussion and the storyline, but also we see this meeting between Xi Jinping and Jack Ma. Is this enough to give you the bullish sentiment to continue pouring into Asian tech shares?
Oh, absolutely. I think, if you look at the NASDAQ and the tech sector in the US, it's taken, all of the money from the world in terms of investment in technology in recent years. And there was an important story out here in Asia. So I think the Chinese tech, broad tech across the Asian region can still do very well from here.
What does that mean in comparison, though, to U.S. tech, Gary?
Well, I think the valuation gap alone is encouraging people into the Asia tech. Now, it's very focused on China, and people have had their concerns about the big Chinese tech companies and also about the Chinese market in general. So we're always concerned that those companies would trade at a significant discount. But there's a limit to it. And I think the good news is also the bad news that comes from the US. The US tech has been struggling to give a big surprise to the market. Whereas I think tech out here in Asia has been overlooked and has a positive story, particularly in the wake of the good news on DeepSeek.
Gary, let's talk about some of that bad news, quote unquote, from the U.S. I wonder, have you been pulling back in terms of your investment in the U.S., just given a lot of the uncertainty around tariffs and around tensions between the U.S. and other partners?
Indeed, we have. I think it's always a risk as a strategist to go underweight the U.S. equity market. But there are certain profits to be taken. And we have quite a few of our clients who've remained very nervous in recent months with the direction of Fed policy and with the loss of momentum in the tech sector. So those two factors alone gave the kind of negative that allowed you to take money out of the US and put it to work elsewhere. And that's been particularly the case in Europe since the beginning of the year.
So what's your sentiment then on Europe? Because we mentioned some of the concern there around the discussions around the end of the Ukraine war. You still feel there is investment to be had during these times?
There is, although, there's been such a sharp spike in the performance of European equity markets, you've got to hesitate a little bit. But the contrast with the US is quite marked. I do believe, often said, this is a cheap market, I just needed a catalyst to invest. Well, that catalyst comes from better corporate news. Siemens last week, for example, was up 7% on some better news about future orders. And that's one of the mainstays of that market. SAP has been doing very well. But also the ECB, your central bank, is being helpful to the equity market. And that's quite a contrast with what we're seeing in the United States.
Let's finish, Gary, on some of the safe havens, and in particular gold. Do you see gold reaching 3,000 within the next few days, and what would be the catalyst to actually get it there?
I think comfortably we're going to go through 3,000, maybe the next few days. But I think although some of the geopolitical problems of the world may be solved in coming weeks, we all hope so, we still have consistent central bank buying. We have concerns about the levels of indebtedness in the United States and indeed in Europe. We're kind of just not trusting of the old world. And there are very few hedges against those kind of risks. So I believe that we are, with more persistent inflation in our Western world than we've seen for some time, going to still see gold making further highs, and I think comfortably through $3,000 over the next few weeks.
And if you say you're concerned about U.S. indebtedness, what does that mean for the 10-year? Last week, we saw a bit of whipsawing with the 10-year. What's your assessment of that?
Yeah, I take great issue with the market that's almost been trying to get back down to a 4% yield on the 10-year and currently trading towards 4.5%. We think with this level of inflation, if it persists, we could see a 10-year yield between 5 and 6%. Whilst that sounds crazy, those were the levels we were trading at when inflation was indeed 3 to 3.5% back in the 1990s. And the difference with the 1990s is that the debt to GDP ratio in the US today is approaching 120%, whereas back then it was 60%. So we have a more indebted government with an inflation problem, and therefore we suspect higher yields.
And the 10-year currently at 4.47%, although cash treasuries are not trading today. Gary Dugan, appreciate your insights this morning, CEO of the Global CIO Office. Thanks so much.
Thanks, Jen. Let's take a look at how equity markets are faring up as we head into the European Open. Jen just mentioned it is a U.S. bank holiday later today, so it's going to be thinner trading than usual. S&P futures, NASDAQ both pointed to open in the green, though, up 0.2 and 0.4% respectively. A lot of focus on European markets today, given all of the headlines coming through from the Munich Security Conference, what that means for the prospects of a Ukraine truce, but also what it means for Europe's defense plans. That's going to be a big focus as well for the investment community over the coming months. So Euro Stoxx futures leaning towards the green, but moderately so, building on from a strong week last week, which saw the index rise more than 3%. Now, coming up, we speak to Rachel Ziemba, founder of Ziemba Insights, on what ending the war in Ukraine means for the Trump administration's future relationship with Russia. Next, this is Bloomberg.
This is Horizons Middle East and Africa, our top stories this morning. Ukraine in focus. U.S. and Russian officials set to meet in Saudi Arabia this week. President Trump insists Volodymyr Zelensky will be involved in peace talks. Meanwhile, European leaders gather in Paris for an emergency meeting. Israeli Prime Minister Netanyahu threatens to open the gates of hell on Hamas if remaining hostages aren't released. Meanwhile, U.S. Secretary of State Marco Rubio says Middle Eastern leaders should offer an alternative Gaza plan in his first visit to the region. Plus, Ghana's president tells us the government is in talks to refine its $3 billion bailout program with the IMF. It has just gone 7:30 a.m. in South Africa. I'm Jennifer Zapasaja in Johannesburg.
And I'm Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. So much of the headlines this morning are surrounding everything that's come through from the Munich Security Conference. And there is an understanding, Jen, that we're moving closer towards a resolution potentially to that conflict. But the bigger question for investors is at what cost? At what cost to Ukraine, and also at what cost to Europe as well, given that there is a realization now that these countries will have to invest more in their own defense and not just rely on the U.S. So that was one of the major developments, I would say, geopolitically over the course of this weekend.
Right. And of course, what does the future of these relationships actually look like, right? As we hear from more and more of these leaders, which of course we're going to get into, you're going to get into with our next guest in just a bit. But let's just take a look at where the markets are positioned ahead of the trading day. We should mention it is President's Day in the U.S., so there will be no cash trading or equity trading. But still, we can take a look at U.S. Equity futures, S&P futures up just about 0.2%. We should note that all major indices on Friday actually did close in the green. The S&P still getting close to that all-time record on Friday. The NASDAQ, again, was able to garner another record, but paying close attention to what that looks like throughout the week, as am I with the RAND, very much because as we talk about the future of bilateral relationships, the U.S. and South Africa is very much in focus. This week, we will have the first G20 meeting, which, of course, South Africa is hosting. We will not see Marco Rubio there, but still a lot of lines coming between the two countries. We're seeing the RAND strengthening for a third day as the dollar sees marginal weakness, and the dollar saw its second week of losses last week. So paying close attention to that. It's at about 18.34 right now. Oil is trading a bit mixed today. Brent crude up just about 0.3%, but that follows 3 days of losses as the markets again continue to digest what the potential conclusion of the war in Ukraine means for flows through Iraq and Russia. And gold also on the board here today, continuing to inch closer to that $3,000 point. We just spoke to our guest who said that he believes that will come in the next few weeks. Gold is up just about 0.7% right now. But we did see Friday bullion falling about 1.6%, its biggest loss since December. So watching closely as uncertainty permeates the markets, what this safe haven looks like. And our terminal chart takes a closer look at what Fed pricing is looking like right now. Perhaps we get a change, a catalyst perhaps when we get Fed minutes later this week. But last week we saw markets whipsawing quite a bit when we did get inflation and also getting PCE. But right now we are seeing the pricing back to about 1 to 2 cuts this year. And so a lot to pay attention to. We did also get those retail sales on Friday. But let's check in on how markets in Asia are faring, and in particular in Japan. Avril Hong is standing by in our Singapore studio to dig into that. Avril, what have you got?
Well, Jen, we're highlighting those Japan GDP numbers. It was a big beat. You look at the 3-month annualized basis, GDP grew by 2.8%, and this beating the consensus estimate of 1.1%. But if you look under the hood a little, you'll see that imports were lower, and even though this boost you're seeing in Japan's GDP for a third month is led by consumption, the imports picture is kind of raising some concerns about the extent of the health of domestic demand. Flip the board because despite these lingering worries, there are those that are really fueled by the Japan GDP numbers. If you look at the yen, it's the top gainer in the region today, and dollar yen is sitting well below the 152 handle. They're also going to be looking ahead to Japan CPI numbers out on Friday. What's also interesting, if you look at the yen rates curve, they're only fully pricing in a 25 basis point hike in September. If you look at the March, the April pricing, that's really, really low. But the point that MLI's Mark Cranfield is making on the blog is that there's still time for repricing. There is still room to run on this. I mean, you think about the BOJ just ahead of their January hike. The 2 weeks before that, we saw that flurry of media reports. So if this is the approach they're going to be taking for maybe March or even April, then, there's going to be a lot to be watching out for just before the March or even the April BOJ meetings.
Thanks so much, Avril Hong in Singapore for us.
U.S. President Donald Trump says Ukraine's Volodymyr Zelensky will be involved in peace talks with Russia, a day after top U.S. advisors suggested the negotiations might actually go on without him. Mike Waltz suggested a deal where the U.S. would take half of Ukraine's rare earth mineral resources in return for continued support, saying Zelensky would be very wise to accept it. But Zelensky was very quick to rebuff that offer, it should be said. Let's now bring in Rachel Ziemba, founder of Ziemba Insights. Rachel, so much to unpack from the Munich Security Conference over the last couple of days. It really does feel like the U.S. want to strong-arm Russia and Ukraine into a truce. And I was reminded of that phrase around the Brexit discussions, no deal is better than a bad deal. And I do wonder, in the case of Ukraine, if we are staring at that possibility as well. If Ukraine signs on to a bad deal where they have to make too many concessions, what precedent does that set for an aggressor like Russia in this case?
Sure. Well, I think the risk is not only for Ukraine, but also for other countries in Europe, particularly countries like Moldova, that's already been under pressure from Russia, but even some of the neighboring countries, NATO countries. So I think the risk is something that a deal that would just allow Russia to rebuild and regroup and continue aggression. And that's the dynamic. I think, we're still in early days of negotiations. There'll probably be a number of rounds. But what President Trump has signaled, as he did on the campaign trail very seriously, is that he wants this war to come to an end, that he's willing to apply pressure, and that in doing so, he is more aligned with the Russian spheres of influence way of looking at the world, rather than the support of the rules-based international order that European allies and Ukraine are espousing. But even on deals like the one you just mentioned on critical minerals, there's a lot of details that are missing and will play out. But for the energy markets, I think what this also tells us is Russia's coming to the table without the need for threats of more sanctions, which had been sort of whispered about. And so I think sanctions enforcement is going to weaken up in the next few weeks.
Yeah, a bearish driver for oil. So let me just park that thought for a second. I want to ask you about Saudi Arabia and this part of the world's increasing diplomatic clout, and the fact that U.S. and Russian officials are flying into Saudi this week to discuss the possibility of a Trump-Putin summit. Why has Saudi Arabia stepped into this role, do you think?
Yeah, I think Saudi Arabia has maintained ties with both countries, right, throughout this conflict, to the pain points from the U.S. throughout part of it, continuing to keep Russia in OPEC plus, and I think really sees that. Also really sees that bringing the war to an end is an important one. But I think it is part of Saudi Arabia trying to sort of build its presence in the region, in the world. It is the G20 member of, in the region. And I think is really is something to watch. It remains to be seen whether how much they will be able to do to make a ceasefire happen. But I also note, interestingly, that among the negotiators on the Russian side, as the head of the Russian Direct Investment Fund, and Kirill Dmitriev, the individual with whom the Gulf sovereign funds actually have a lot of historical dealings, and so that also be something that we're watching. But Saudi Arabia and the UAE as well, I think, really trying to be involved in diplomacy here. And notably, Chinese diplomacy.
Rachel, let me bring it back to energy markets here. And I guess one of the big questions for investors in the space is what is going to happen with Russian supplies? If there's a slightly lighter touch on sanctions enforcement, that's not the same as the removal of sanctions. How quickly should we expect Russian gas, Russian oil to come back to the market, assuming that there is a truce in Ukraine? Or is it too early to talk about that?
So I think it's a little bit early. It's especially early for any long-term investment in that context. What's been notable until recently was that Russian supplies of oil stayed on the market. They just had a convoluted route to market. So they got paid less, they used the shadow fleet, but the volumes weren't really going down very much. That changed a bit with the January 10th sanctions that the Biden administration placed. And we've seen around 500,000 barrels a day, at least, of oil come off the market. We've seen difficulty making payments. And that's something, maybe if there's a loosening up of enforcement or the lack of new sanctions, that we might see a little more volumes coming back on the market. But at the end of the day, on the natural gas side, that's going to be further in the future. Russia pivoted to selling more LNG. Right, Russian LNG and U.S. LNG is what's going to Europe now, and Ukraine would be an important player in thinking about piped gas coming back into Europe. Now that's quite premature now, and we're less than 2 months out from the time when Russian piped gas stopped flowing through Ukraine at the January 1, but in the longer term, if there's a lasting ceasefire, and that's a very big if, but I would imagine some additional volumes would start to flow. But I think we're going to have a lot of rounds of diplomacy and negotiation, and maybe even some tightening up of enforcement again of sanctions later this winter or spring before we get there.
Yeah. Yeah, still a lot of questions to be answered, but could have significant impact on some of these markets. Rachel Ziemba, founder of Ziemba Insights, thank you as ever for coming on our show.
Now, for a look at some of the other stories we're following this morning. President Trump says he'll unveil new tariffs on cars, adding to a wave of threatened import levies. The move comes just days after the U.S. president ordered plans for reciprocal tariffs on numerous trading partners. Levies on autos would upend an industry in which imports account for roughly half the market. President Trump's top economic advisor says he'll meet regularly with Fed Chair Jerome Powell to exchange views about the U.S. economy, giving the president a channel to convey his opinions to the central bank. White House National Economic Council Director Kevin Hassett says the plan revives a practice in place during Donald Trump's first term and won't infringe on the Fed's independence. A tourism investment startup of Saudi Arabia's sovereign wealth fund is planning new projects in Tier 2 cities across the kingdom. This as the nation looks to further its goal of becoming one of the world's most visited destinations. Asfar says it will launch its first developments by the end of the year in the mountainous region of Al-Baha in the southwest and Yanbu on the Red Sea coast. Now, coming up, South Africa says it prefers a bilateral trade deal with the U.S. instead of the existing agreement. We have the details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasajja in Johannesburg. Now, Bloomberg has learned that South Africa is preparing to pitch a bilateral trade agreement with the U.S. The plan is being readied in case President Trump revokes the nation's and the continent's preferential trade access as relations between the two countries sour. Joining us now is Bloomberg South African Parliament reporter Paul Vecchiato, joining us from Cape Town. Paul, always great to get you on. Thanks so much for joining us. Talk to us about what the ramifications are for South Africa if it loses AGOA privileges, because that is a preferential trade access that we're talking about there.
Right. If South Africa loses that, we'll certainly lose access to a lot of citrus exports to the United States. They estimate about 50,000 agricultural workers' jobs depend on that access to the US markets. South Africa will also lose access from its automotive industry, especially car parts going into the United States. So there's a lot. The last figures to come out was South Africa exported about 59 billion rands worth of manufactured goods to the United States, and that was in 2022. So it's a huge chunk of the economy.
And Paul, give us some insight into this reporting, because you got this as our government reporter. Why would South Africa prefer a bilateral trade deal, especially considering the tensions between the two countries right now, as opposed to AGOA?
Right. AGOA has always sat a little bit uneasily with the South African government. The main reason is all the decision-making power is in the hands of the US. So they can decide who's in, who's out, and amend AGOA, because AGOA is actually a US law. So the South African government would far prefer to have a bilateral type of trade agreement with the United States. So while South Africa exports a lot of goods and into the United States, as far as I know, the only US export to South Africa, chicken pieces, are linked into that trade agreement, in that if South Africans like their fried chicken, so they would lose tariff-free access for those chicken pieces, and that's the only goods I know of. So it's very much the power of the trade is in the United States' hands. So South Africa would like to have some kind of bilateral trade agreement.
So what does the future of AGOA then look like, Paul?
Well, it's hard to say because all permutations are going through, so it's very early stages. First of all, they have to wait for the United States to make a decision, and that should be around September, October this year, and then see what proposals come through. South African diplomats have said to me they reckon that US President Trump far prefers a deal. AGOA isn't actually a deal. So he probably prefers something like a deal, a trade deal.
We'll see where that lands in the next few months. Bloomberg South African Parliament reporter Paul Vecchiato in Cape Town for us. Paul, thanks so much for joining us. Now, coming up, our exclusive interview with German Chancellor Olaf Scholz on tariff threats and free trade. That's next. This is Bloomberg. Yeah.
Welcome back to Horizons Middle East and Africa. I'm Ziemba Insights in Dubai. Germany's Chancellor says the European Union is strong enough to stand up to President Trump's tariff threats. But in an exclusive interview, Olaf Scholz told us the EU is open to talks to avoid an all-out trade war.
I have to admit that I'm in favor of free trade. I think this is a big advantage we have in the world, and that many of the wealth and the growth we have in the world is because of free trade. So it must be fair free trade, yes, but free trade is better than tariffs and protectionism. I don't think that this will work.
So it should lower tariffs?
When it comes to the European Union, I think everyone knows that we are a big economic area with a lot of strength, where policy about tariffs is something that is our common policy. So we are strong enough to react to everything that is harming European economy. But we should react always, but in a way that is always offering the chance for an agreement, because it's better for all parties involved, especially on both sides of the Atlantic.
But is the European Union considering cutting tariffs before any announcement on cars?
We invite the United States to discuss with the responsible authorities about what we can do for a better progress that serves all of us. There is a willingness. And so I'm sure it's better if we agree to something that helps all of us. And it is good to know that Europe is strong enough to act and to react.
You talk about it being a common project, but Donald Trump has made clear that he wants to do reciprocal tariffs. He doesn't want a WTO approach where all the rules are on the same countries. And even with the European Union, he might want to have a different tariff regime for France and Italy and Germany. What would you do then?
The European Union is a unified economy and has...
but there's nothing to stop the US doing that.
But it has common tariffs, and we act together, and we will stick together, which I think is also important. And so I'm quite confident that a good solution is feasible, and everyone should work to make it happen.
That was German Chancellor Olaf Scholz speaking exclusively with Bloomberg's Stephanie Flanders. Also, don't forget that a German federal election is coming up in a week's time, and Scholz is not expected to be re-elected. But I think, Jen, one of the takeaways from this weekend is the U.S. are coming after Europe in so many different ways on defense spending. Also on tariffs, there's Stephanie Flanders speaking to the German Chancellor about the possibility of reciprocal tariffs. And so it is really up to Europe now to come up with an alternative response. We know that Macron convened a summit for European leaders to talk about what they can offer to Ukraine in terms of security guarantees. And clearly there's going to have to be a lot more focus on EU's own defense spending plans, irrespective of the path that the US decide to take in the future.
Certainly. And even throughout the week, Jumana, we can expect that to continue to be a discussion. You mentioned the German election that is happening in just a few days. We also have the first convening of G20 foreign ministers happening here in South Africa towards the end of the week. So you can only expect a lot of these discussions that were had over the weekend and at a lot of the meetings that we're seeing right now are going to continue throughout the week, especially when it comes to a lot of European officials then coming here to Africa and hearing from the African Union, South Africa, and a lot of the other G20 nations just about the future of what these relationships look like. So we're going to be paying close attention to the outcome of these discussions.
Yeah, as you move towards an increasingly multipolar world, you're going to see all of these different blocks of influence look to exercise their influence. All right, a quick look at markets before we head out for the show. Most of these futures are leaning positive. Remember, it is a U.S. holiday today, so we'll get slightly thinner trading than usual in the U.S. But that was it for Horizons Middle East and Africa. I'm Jumana Versace in Dubai with Jennifer Sabazaja in Johannesburg.